Good morning, everyone. Um, just give a quick recap on March 22nd last week, ending 26. And also, you can see a snapshot about what have been happening with technology, energy stock in Russia 2000 the last week or so. The market started well on last Monday with Fed Powell, Chairman Powell, and Yellen optimism about U.S. economic recovery. Then Tuesday, with yield curve rebound high and supply chain disruption, market went downwards. Fire in Japan manufacturing plant made semiconductor chip shortage situation worse. Stocks such as Toyota tumbled. With European lockdown due to increased COVID-19 cases drove European stock market down and also impacted U.S. market. Durable goods orders were worse than expected, especially in the auto industry. However, this was offset by a better than expected initial jobless claims number. Investors were closely watching the yield curve and possible inflation. The concern of European lockdown drove the market dipped but rebounded by oversold and yield curve dipped a little lower by Friday. Investors continued to find directions and the market regained traction and Nasdaq went up by 1.1 and Dow Jones by 1.2% Friday. For the week of March 26, Dow Jones Industrial Average went up by 1.4%, ending 32,072.88, while Nasdaq was tumbled 0.6% from 13,138 to 12,996. S&P 500 was also up 1.6% to 3974.54. Technology, energy, and small cap stocks have all experienced declines of more than 10% in recent months, as you can see in the graph. Electric vehicle stocks have taken a hit the past few weeks amid a rotation away from high-value tech and growth names. GM generally pledged to invest $27 billion to launch 30 EV models by 2025, and yet show off new cars like electric Hummer, which is set to be released in 2022. Ford released the Mustang Mach-E, which has taken market share from Tesla. Selling free yields erased $35 billion from stock value of major Chinese tech and U.S. media company Friday, and Wall Street speculated it was in part driven by the forced liquidation of investment firm Holding, which probably not true. There was a rumor that all the Chinese stock holding will have to be forced to delisting from U.S. Stock market due to the recent issue with China and U.S. tariffs discussion of first round. But I'm not so sure that is true because it hasn't been confirmed yet. It was because some of the stock, which is ADR, the holdings in U.S. were reviewed by SEC on their financial statements, which typical that could happen any quarters, anytime, and really any companies that if SEC would like to be reviewed. Only Disney is still recovering from an earnings hit over the past month and still for reopening rebound in coming months. And I think Friday ended at about $185. For GE, Facebook, Target, and Scott Miracle Grow, reopening is a primary driver. In some cases, might be a mixed bag. Aggregate wages and salary have already topped their COVID peak, so there's a plenty of cash to go around. Disney revealed plans for a big expansion of Disneyland on Friday. The California theme park is set to reopen on April 30 and 15 to 35% capacity, which really awaited on Memorial Day holiday in May, which typically then will summertime and people will be on holiday and bringing kids over. So it was probably a good plan to test around April to see if how things going for Disney. Even and really these days theme park wasn't really let's say a major income for Disney, particularly in really in the streaming business. They have a tremendous growth. So Disney stock, if in my opinion, if it go down further, it's probably a good one to hold. I mean, if you look at the history, I mean, they were $200 years ago, but then because they were not performing very well, have some issues, and at one point it dropped down to $90 a share. They always find their own ways on one movie that really saved the company. Just like Nintendo, sometimes they have their ups and downs. So you probably can look into and study more about this stock. And GM stock is another leading stock whose pullback to its 10 with 50-day line in the past week has created a buying opportunity. And after bouncing off its Thursday low, GM stock already knows back about its 21-day moving average of 56.15, giving investor green light. Asian markets were up Monday, and European markets were mixed with DAX up 0.4% right now. US stock fell after sell-off linked to Eagles. US futures are down slightly. China Pacific Insurance Group and China Petroleum Group share their fourth quarter result today. You may have bought some share earlier of the week or even previous week and maybe still at a loss. However, there's a good reasons you picked the stock. So we look forward April after fund manager reallocated their portfolio stronger than expected March retail sales result. Assuming the 1400 check, Americans are still spending on buying goods and cash on the sideline, we have to put somewhere in the investment. More good news possible offset the bad news of risk that we have already known or priced in at this point. So be patient and looking forward. Things are getting better, and probably right now will be more in a waiting mode and see how April can be push market into modestly higher possible. And hopefully then it's the opportunity to take some gains and offset some of the losses you had in March. Have a wonderful week. Thank you.